the Indian economy gathers pace and the rebound is slightly better and sooner than anticipated, all eyes would be on the Q2 GDP data, which is expected to be released on Friday. Sajjid Chinoy of JP Morgan does believe that a Q2 GDP is like the contraction rather in the of the Q2 GDP is likely to be shallower than expected earlier, and also he does forecast the Q2 GDP contraction to be closer to somewhere around 8%. This in turn can lead to trigger a raft of GDP upgrades for the full year, and also he believes that the GDP numbers are likely to reinforce India as a growing market. Sajjid also believes that the India economy is in fact recovering stronger than anticipated earlier, and that equity markets have been on a tear and growth upgrades can only be expected to fuel more buoyancy. In fact, if we look at what the Reserve Bank of India has also stated, they are definitely stating that the Indian economy has exhibited stronger than expected recovery and rebound, and demand sustenance, however, would of course need to be keenly watched out for. RBI also believes that yes, there are considerable downside risks yet to the economy, and rising COVID cases also needs to be watched out for. However, recently RBI also did mention that there is a strong likelihood that Indian economy would return to positive growth in Q3. They did mention that the aggregate supply conditions have posted a marked improvement in agriculture as well as the manufacturing sector, and revival of economic activity is stronger than just mere satiation of pent-up demand. In fact, if we look at what ET Now poll is also projecting, well, as per ET Now poll, the GDP contraction for Q2 is likely to be somewhere closer to 8% as well. In fact, we should be seeing the agriculture supporting the overall GDP, while a lot of the contribution of allied activities would also be higher in Q2. A large part of the Kharif crop numbers would of course show in Q3. Besides that, of course, if you look at the Q2 earnings season, that has been a blockbuster, and also festive season has been fairly strong, and we are also seeing good amount of pent-up demand, and all these factors are likely to lead to a shallower contraction in the overall manufacturing GVA. High frequency indicators also so far have indicated some amount of recovery, although there have been slightly mixed trends in some of the indicators, but broadly I would say the recovery so far has been fairly good. We of course need to wait and watch out for will the recovery that high frequency indicators are showing, is that going to sustain or not. Besides that, on the services side, yes, we should be seeing a little slower decline in the real estate. So yes, there should be some amount of recovery in real estate as well as the overall financial services versus Q1. Public administration and defense would also show a relatively slower contraction versus the previous quarter. So all in all, it is likely to be a slightly slower than anticipated contraction in Q2, and there is a likelihood that we may see more upgrades coming in for the GDP forecast coming in from various economists. So far, we have already seen Moody's as well as Goldman Sachs going ahead and upgrading India GDP, and if at all the contraction is slower, yes, that is some amount of good news further coming in for the economy. All eyes would be on Q2 GDP. It would be released on Friday.